Okay. Good evening, guys. So today another accounting standard, that is valuation of inventories. So you know that inventories uh, are the assets which are categorized as current assets. All right. So what are the items involved in inventories? Uh, it is finished goods, raw material, spares, consumables, work in progress, everything. So, in accounting standard 2 is applicable to every inventory other than this construction contract work in progress. Okay, because that is covered under some different accounting standard. It is covered under accounting standard 29, that is revenue recognition. Work in progress arising in the ordinary course of business of service providers. Because in case of a service provider, unless and until we complete that particular service, we cannot recognize it as inventory. Service which is not yet complete, we cannot recognize it as unfinished service, right? So to them it is not applicable. Neither this accounting standard is applicable to shares, debentures which are held as stock in trade, that means which are held for trading purpose. So, produces inventories of livestock, agricultural and forest products, mineral oils, ores, and gases to the extent that they are measured at net realizable value in accordance with the well established practices in those industries. So, that means to these items as well, the accounting standard 2 is not applicable because, as per accounting standard 2, we value inventories at cost or net realizable value, whichever is lower. But as per the established norms in these industries, we value these items at net realizable value only. Okay, so remember these items. There may be some problem in exam with respect to these items: mineral oils, ores, gases, livestock, agriculture, and forest products. Right. So inventories are basically assets which are held for sale in the ordinary course of business. Right. It includes goods purchased and held for resale, which are in the process of production for such sale, that is work in progress items, finished goods, which are in the form of materials or supplies to be consumed in. That means uh, if you are using high speed diesel, you are using some lubricants. Okay, that is also an inventory. Some spares which are categorized as plant property and equipment, that is the spares which have substantial value as per company policy and which have life more than 1 year, we categorize them as major spare. Okay, and the definition is given in plant property and equipment, so that is not covered in inventory. How to determine the cost of inventories? So it is similar to valuation of any other asset, that is the uh, direct costs which are incurred to bring that asset to the location and condition necessary for it to put to use, that is purchase price, any duties and taxes which are non refundable. Okay, uh, any other expenditure like freight cost, right? Which is necessary uh, for that item to you know bring them to factory location. We don't include trade discount rebates in the cost of purchase of inventories. We include the cost of conversion, that is direct labor, direct material. Okay, and overheads as well. So in case of overheads, fixed production is there and variable production overhead is there. So treatment of fixed production overhead is different and treatment of variable production overhead is different. Okay, we will see that later on. And basically cost incurred to bring the inventories to their present location and condition, that we already covered. So all these items of cost we need to add to the cost of inventory, and we will recognize those inventories at that cost. uh, how to allocate the cost between joint products and byproducts? So joint product means like uh, butter and ghee. Those are one kind of joint product, one type of joint products, or a lot of other examples as well. Joint product means the proportion of revenues from each of those product will be more or less similar in nature. So when the cost of in that case, if how to treat the cost, whatever cost we incur till the product becomes separable, how to divide that cost between two joint products or two or more joint products. When the cost of conversion of each product is separately identifiable, that means if we can identify the cost which is required to you know manufacture those joint product, then we should allocate the cost directly to those items. There is no question at all. But the question is what to do in case where the cost of conversion of each product is not separately identifiable. In that case, what we can do is we can allocate the cost based on relative sales value of each product, either at the stage in the production process when the product becomes separately identifiable, or at the completion of the product. That means अगर जहां तक हमने जॉइंटली प्रोड्यूस किया है वहां तक का खर्च, वहां तक जो भी सेल्स वैल्यू होगी उस पॉइंट तक, उस सेल्स वैल्यू के प्रपोर्शन में कॉस्ट को एलोकेट करना चाहिए. अगर वहां पे आप बेच नहीं सकते तो पूरा कंप्लीशन होने के बाद जो सेल्स वैल्यू होगा उसके प्रपोर्शन में हमको कॉस्ट को एलोकेट करना चाहिए, जॉइंट कॉस्ट को. एंड व्हाट अबाउट बाय प्रोडक्ट्स? सो बाय प्रोडक्ट इज लाइक sugar and molasses. That is a byproduct. So we don't have any purpose to produce byproduct. We don't have any uh, motive to produce the byproduct, but we have motive to produce main product. Byproduct is just because of that process we get that item. So when the cost of byproduct is immaterial, mostly that is the case in case of byproducts, that's why we call it byproduct. Okay, in that case what we should do, whatever cost we have incurred for production of main product, we should reduce that cost by the net realizable value of the byproduct, right? And that will be the treatment, right? So what does conversion cost mean? It means factory overheads. We don't include the general administrative selling distribution overheads in the value of asset, right? It may be current asset or it may be non-current asset. So factory overheads can be of two type, fixed and variable. So here in case of fixed overheads there is one particular treatment. If normal capacity is to produce 1 lakh units, let us say, and uh, your fixed overhead cost is 1 lakh rupees, all right? And if you are producing less than 1 lakh unit, that is less than your normal capacity, you are producing, let us say, 90,000 units. So you absorb at the budgeted rate. Okay, you allocate, you collect from each finished product, that is 90,000 units, 1 rupee each. So your absorbed cost will be, absorbed fixed overhead will be 90,000 only, and remaining 10,000 which is not absorbed, unabsorbed overhead, we will charge it to P&L account as abnormal cost. All right. But when you exceed that normal production capacity, if you are producing 1 lakh 20,000 units, let us say, when your normal capacity is 1 lakh, then what you should do? Then you should reduce that budgeted rate. That means in that case, you should not over absorb the overhead. Okay, then in that case you will reduce the rate of uh, overhead from 1 rupee. Okay, you will reduce it to 1 lakh fixed overhead divided by actual production 1.2 lakhs. Okay, and you will recover only 1 lakh tax fixed overhead, you will absorb that much only. Okay, so that is the particular treatment you should remember, because in exams the problem will come on this particular event, on this particular phenomenon. Okay, so that is the case to remember. The reason is, when you produce less than your normal capacity, then you cannot absorb all the overhead, because that will be abnormal cost, and abnormal cost should not go into the cost of inventory. Okay, and when you are producing in excess of your normal capacity, okay, you cannot absorb something which is not there. That means if your actual overhead is only 1 lakh rupee, how can you absorb more than 1 lakh? So that is why the treatment is of this nature. And in case of variable overhead, there is no problem at all. Whatever actual production is there, it will come in the proportion of actual production. So you allocate or you absorb overhead as per actual production. Okay, so joint cost I have we already discussed. All right, costs which are exclusively cost that we exclude from the cost of inventories: abnormal amount of wastage, okay, like we discussed above. Storage cost we don't include in the cost of inventories unless it is very much necessary part of production. For example, wine. Okay, in case of wine it is necessary to store that particular item for a long period of time. So in that case also remember that in case of borrowing cost, we recognize that normally we capitalize borrowing cost for qualifying asset, the that is normally non-current asset. But where the inventory is of qualifying nature, that it takes substantial period of time to get ready, okay, then we can capitalize borrowing cost and we can capitalize storage cost as well. Otherwise we normally don't include storage cost in the cost of production. Administrative overhead we don't include. Selling distribution overhead we don't include. All right, so some cost formulas we need to discuss. So historical method. Okay, uh, we have two formulas, two recognized formulas as per Ind AS, as per accounting standard. First in first out method and weighted average method. You already know that. Okay. Uh, and non-historical method, there is one peculiar method that is called as retail inventory or adjusted selling price method. I will explain this to you. When you have a lot of items, that is you are selling something in retail, you have a lot of items like DMart or your kirana store, you have n number of items. It is not possible to keep the store's ledger for each and every item. So in that case, what you do, whatever the selling price or selling, whatever the margin for that each category is, suppose you are selling at a gross margin of 10%, 20%. So you need to consider the margin of that those particular items. Okay. And you reduce that margin from selling price of those particular items to arrive at the uh, valuation, that is the cost of that item. That is the method we use in retail inventory. फॉर एग्जाम्पल, कोई आइटम अगर 1 लाख रुपए का है, उसके ऊपर मार्जिन अगर आप चार्ज करते हैं 10%, ठीक है, तो 1 लाख इज सेलिंग प्राइस. ओके, इंक्लूडिंग मार्जिन, लेट अस से यू चार्ज 25% मार्जिन, योर ग्रॉस मार्जिन इज 25% ऑन सेल प्राइस. सो 1 लाख, that means 1 lakh is 125%, okay, of cost. So your cost will be 1 lakh divided by 125%, that is your cost will be 80,000 in that case. All right. So that is how you uh, value in retail inventory method. All right. So standard cost method is also there. You know standard cost. Okay, we take historical basis and you arrive at standard cost. Okay, what would be the standard cost and all. uh yeah, so these are the important techniques. So we discussed this. Yeah, so finished goods and work in progress you measure at lower of cost and net realizable value. Net realizable value means the fair market value minus selling expenditure less estimated cost of completion, because in case of work in progress there will be some estimated cost of completion. And raw material, this is an important point to remember. रॉ मटेरियल के केस में आप क्या करते हो, अगर आपका फिनिश गुड जो वो रॉ मटेरियल बना के आप जो बनाओगे फाइनल प्रोडक्ट फिनिश गुड, इफ दैट फिनिश गुड इज गोइंग टू गेट सोल्ड above its selling price, above its cost of production, then obviously finished good you will value at lower of cost and NRV, that is at cost, because your net realizable value is more than cost in finished good. In that case रॉ मटेरियल उसका जो भी यूज होगा, जो भी स्पेयर्स यूज होंगे, जो भी कंज्यूमेबल्स यूज होंगे उसके प्रोडक्शन में, यू वैल्यू दोज आइटम्स एट कॉस्ट ओनली. उसके केस में आपको कॉस्ट और एनआरवी रॉ मटेरियल के केस में देखने की जरूरत नहीं है. लेकिन आपका मेन प्रोडक्ट जो है फिनिश प्रोडक्ट है, इट इज गेटिंग सोल्ड एट लेस, इट्स एनआरवी इज लेसर देन इट्स कॉस्ट, देन आपको रॉ मटेरियल के केस में भी देखना पड़ेगा कि मेरा कॉस्ट ज्यादा, कॉस्ट कम है या एनआरवी. ठीक है, तो ये तरीका है इसको वैल्यूएशन करने का. ऑल राइट. सो ये सब इंफॉर्मेशन आप आपको दिखाना है. दैट इज आपका बैलेंस शीट में तो एक ही आइटम होगा नॉन करंट असेट्स में, दैट इज इन्वेंटरी. और नोट्स टू अकाउंट्स में आपको दिखाना है उसमें से रॉ मटेरियल कितना है, उसमें से वर्क इन प्रोग्रेस कितना है, फिनिश गुड्स कितना है, लूज टूल्स कितने हैं, स्टोर स्पेस कितने हैं, इंपोर्टेड कितना है, डोमेस्टिक कितना है, ऑल दोज थिंग्स यू डिस्क्लोज इन द नोट्स टू अकाउंट्स. राइट. सो yeah, so this was all about accounting standard 2 inventories. Any doubt is there, you can ask me, you can contact us for admissions and all. Thank you.